Yo, what's up, guys? Today I just want to talk about the 5 investment tips for beginners. So stay tuned in this video, and I'm gonna exactly explain on how you can start investing as a beginner. So let's get right into it, guys. So number one, right? Start small. You don't have to go big, right? Just start small and start now. Start today, right? Do your financial research, of course, but start small. So, you guys, you don't need a lot of money, right, to start. You can start with $10, $50, $100. The key is consistency, right? So, compound interest, right? It's going to make your money grow. The earlier you start, the more powerful your returns will be over time, right? So, after 10 years, you're doing like a 2x. After 20 years, it's a 4x. So, if you put $50 in right now today, in 10 years that could be at least 200, right? And that's going to protect your money from inflation. So instead of you keeping it in the bank account and it's going down and down, it's going up and up now. So the earlier you start, guys, the more powerful your returns will be over the years. You can use apps like Wealth Simple, Quest Trade, or whatever bank that you're with. They may have investment platforms. So give them a call, ask them if they have any investment platforms, or you can use with your own bank instead of reaching out to third party apps like Quest Trader, Wealth Simple. So just if you have your bank, just make it very simple. Give them a call and let them automate maybe at least 10% of every paycheck you get. Put maybe 10% away of it into index funds or something. That's just gonna every time you get a paycheck, if you're putting 10% away, over time you're gonna look and your crop will grow, right? It's gonna grow from maybe you putting in $50 every couple of weeks. That's $100 a month, and then after that, the end of the year, that's at least 1,100, 1,200. The next year, that's 2,400 plus the gains. So it's very slow, but it's very easy just to put in 10%, right? $50 every paycheck, right? That's it. That's all you need to put in. Start small and start today. Guys, the second tip is learn the basics before you invest your money, right? Understand the basics like stocks, like ETFs, mutual funds, right? Bonds, index funds, all these things, right? You have to understand the basics. So I'll break it down to you real quick. So stocks, right? This is ownership in a company. So it's some of them have high risk, right? You have high risk trading and all this stuff, high yield stocks. Sometimes a company is making an exit and they increase their yield, which is money that they return to their shareholders, and that that can like your money could be going up from the high yield, right? But the stock price could be going down, so it's very high risk. So what they do is they have something called blue chip stocks, right? Blue chip dividend stocks also. Those are stocks that have been increasing over a long period of time. They have a track record, right? 60 years, right? 70 years. They've been increasing for all those years. Every year they have an increase, not only in stock price, but in dividends. So those are safe stocks, low yield, blue chip stocks. ETFs, right? Index funds. ETFs and index funds are bundles of investments, right? They spread your risk and they're perfect for beginners. So they introduce you to a plethora of different stocks like Apple, Microsoft, Tesla. All those are in one stock. So if you want to be safe, ETFs are one of the best things. Bonds, right? Bonds are loans to companies or governments. They're safer, but they're slower growth, right? So they're loans to companies or governments. Mutual funds, right? Those are ETFs as well, but they come with higher fees because they're usually managed for you. It could be a manager, whoever is managing the mutual fund, and they're taking a certain cut. So number three, guys, think long term. Don't try to make quick money from the stock market, right? So real investing, it's not gambling, right? So don't try to get rich quick, because there's a difference between gambling and investing. Don't panic sell also. When the stock dips, stick to your plan. Hold out for the long term. Remember, you're protecting your money against inflation and you're going for the slow compound growth. Trust the process as well, right? Stay patient. So investor Warren Buffett, right, who's worth billions of dollars, he says the stock market is a place where they transfer money from the impatient to the patient. So just understand that. That's one of the greatest things to know, because all the time, like during the 2008 stock market crash, right? Everybody pulled their money out. Everybody wanted to have a good savings because they didn't know where the world was coming into, right? The people who stayed stuck on their plan during the 2008 market crash, they became very, very wealthy because they stuck to their plan. They didn't worry about the dips because they knew that everything comes to people who are patient, right? Be very patient. Guys, also diversify to protect yourself, right? This is number 4. Don't put all your money into one stock, or industry, or, country. So there's different industries and stocks. There's tech, there's renewable energy, there's everything. There's different industries that you can invest your stocks into, right? There's medicinal, all type of stuff. Don't just go into one stock. There's also banking. Don't go into just one of those industries. Diversify, right? Figure out, because you never know, the crypto and banking, those are two things that are fighting for each other, right? There's banks that want to keep your money, and then there's crypto that would like you to have digital currency. We don't know how long any of these things are going to last, right? So it's good to diversify your risk, right? Just play it safe. So ETFs and index funds, guys, these are one of the greatest things for this. They automatically invest your money across dozens, right, or hundreds of companies at once to diversify your risk. And then number 5, guys, automate and stay consistent, right? So once you start, make sure you're automating your savings, set up monthly automatic contributions to your bank, right? I told you this before, make sure you do this. And then take your emotions out of it, right? Don't try to time the market, and consistently buy no matter what is happening. Your strategy will work over time. It's better than chasing trends, and you're building wealth on autopilot, right? So don't try to chase any trends. Focus on your strategy and consistently buy. If you put 10% away, even 5%, could even be $20 from your paycheck. That adds up, right? Over the year, that's going to be about $2,400, or not 2,400, sorry, about 20 bucks every paycheck. That's about $600 at the end of the year. And then after 2 years, that's $1,200. And then the next year, that's another 600 added. That's 18 plus the gains you made. So that could be about 2,500, 26 after 3 years. And then you're continuously moving and moving. And mind you, this isn't something that is like, you're spending all your money. Like, you can't afford the groceries anymore. You can't afford rent anymore. $10, $20, if you're, buying coffee every day, save that for a week. Put the $10 in. After 20 years, right? You'll look at your account and you'll say, oh my gosh, I have about, 50, 60, 70 grand in there just after just investing my money into a nice diversified portfolio of stocks or ETFs or index funds, whatever it is, right? It's like a savings account, but you're getting paid to have your money saved in there. So remember, guys, this isn't financial. I'm not a financial advisor, right? So this isn't financial advice. Make sure you do your research. Take what I gave you and do your research. And then if this works for you and you feel like this is great, then do it. Also do your research on credit cards too as well, right? If you have a credit card, make sure you're getting points from it. Make sure you're using it, and make sure you're paying off the balance, right? Every time you use it, pay off the balance. Don't accumulate debt, right? Pay off the balance every time and get the points, right? You could travel, you can you have good credit, you can afford a nice place now because your credit is great. You can rent, all these things if you have good credit. So build your credit as well, right? And do your financial research, do your financial homework, and take what I gave you. And if this is a good thing for you to do, look more into it. So guys, subscribe, like this video, and I'll see you next time. Peace.